Hi, everybody. It's been a while. Taking a few weeks off of doing these rate updates just because I've been busy, just getting loans done for folks. So I've got a brief moment of peace here. So let's bang one out. Let's see where rates are today. Let's see, it's 3:13 Mountain Time, June 28th, 2021. So we're going to start checking rates on owner occupied. So conventional loans, standard 30-year fixed on a purchase. 75% loan to value, good credit, got some reserves, primary residence, single family home, one unit. Pick a zip code in Arapahoe County, and let's see where rates are at right now. Here we go, walking into dozens and dozens of lenders. All right, so our best pricing lender is at 2.875, and that's got a $2,411 credit back. Let's see what the other rates are looking like. Remember that credit back, that's called the yield spread premium, the secret back end money that not all lenders tell you about. If it's in our loans, you get it. The borrower gets it. You can use that to pay for third-party closing costs. What are third-party closing costs? The biggest one is title, right? Title, tax, insurance, stuff like that. And let's see, 2.75 is costing $495. This is on a simple example, $500,000 purchase of a single family home. So you'd be debating between taking the 2.875 and getting that big credit back, which would pay for essentially all your third party closing costs, and or bringing an extra $495 and getting the 2.75, and that would be a long-term versus short-term analysis, right? So obviously the higher interest rate with the kickback to pay for closing costs is better for you in the short term. But if this was a long-term play, if you're going to hold on to this house for 5, 7, 10 years, then it would be better to choose the lower interest rate and pay a little extra. So again, 30-year fixed, good credit, single-family owner-occupied purchases are at 2.75, 2.875. Let's go back and check investment property. So I'm going to change this to investment property. Everything's still the same, good credit, 75% LTV, still got reserves. Let's see where investment rates are on this June 28th, 2021. And it's loading. Now, I guess on that last one, I never scrolled down and showed you what the worst lender is doing. But let's see where we're at here. So looks like par is going to be around 3.25. Let's see here. Okay, so on an investment property, you're looking at about 3.25 with a small cost, $319 cost. If you I'm getting ahead of myself. So best pricing lender at 3.25 is costing $319. That's pretty darn close to what we call par, right? Where you're not bringing too much to closing, you're not bringing much extra to buy down the rate, and you're not getting a credit back to pay for closing costs. So if the best pricing lender in our pipeline here is at 3.25 costing $319, let's just scroll through all these lenders' pricing. Some of them you know, some of them you don't. Most of them you don't because they're wholesalers. Holy cow, 3.25 is the worst is costing $46,000. I mean, obviously that's insane and would never ever happen. I mean, that can't be possible. There's regulations that would deny that loan in a half a second. But you can just see, all things, we're sorting for, okay, we're going to keep the same rate, and here's the cost right here that I'm highlighting. It just gets insane. This, again, is the power of the broker, right? Now, do we always pick the cheapest lender? Of course not. We pick lenders who can get it done in 30 days, pick lenders who have quicker turn times, quicker appraisal times, quicker underwriting times. It all depends on the specifics of the deal. Some of these lenders are great at investment properties. Some of them are not. Some of these lenders are great with people who have, 5, 8, 9 investment properties already, and some of them are a pain in the butt to work with. Some of them are good at condos, some of them are not. So there's more to this calculus than just, hey, who's got the lowest rate? But for the most part, I mean, that's where we start, right? Our job is to find the best possible options with the lender that can get it done with keeping us all sane, right? That is the mortgage broker's job. So there you have it, folks. 2875 on 30-year fixes for owner occupied, and you're looking around 3.25 for the same, 75% loan to value. Oh, the other thing I didn't do, and I know I need to do this. Let's take a look at this APR. So here's the interest rate, 3.25, and here's the APR, 3.278. A good barometer check is you always want your interest rate to be relatively close, pretty darn close to your APR. If your APR, for example, is way higher, right, than the interest rate you're paying on your money, you're getting hosed in fees. One big reason our APRs are so close to our interest rates is because we don't add fees to the loan. We're a no-fee lender shop. We get paid by the lender, the same amount by every one of these lenders for moving their money. So there's no Excel financial processing fee or Excel financial jibber jab fee. So the difference here is what? 0.028% difference. So it's very, very close. If that APR, for example, said 3.8 or 4%, and the interest rate on your money is 3.25, you'd be getting rocked in fees, right? That'd be a very expensive loan. That's something where you'd have a huge buy down cost or something like that. So that's a good barometer check, not only for mortgages, but for any loan where they have to disclose an APR. Okay. So there's my lecture. Hope you're all well. Happy Monday. Take care. Oh, I guess I got to show my NMLS number before I sign off here. Let's see if I got that pulled up. No, not that one. This one. There we go. There's my NMLS number. Where'd it go? 1277582. And here's my contact info if you want to get a hold of me. It's like that. Bye-bye.